What is going on, everybody? It's Tyro Investing here with another video. Today I will be covering my personal top 2 dividend stocks that I am holding for long term and kind of go over the reasons why I like them. So my first stock I'll be covering is SCHD. It's the Schwab Dividend ETF. I currently hold about 24, last check, 24 shares of SCHD. Basically, my plan with my long-term holding is just DCA every single day. I have about 4 to 5 holdings that I hold long-term. And if one of them is maybe down more than the other one, I'll buy more of that day. And that's basically my plan and how I've accumulated shares over the past year. But anyways, why is SCHD one of my favorites? Well, it's a dividend ETF, so it's very dividend focused. Just looking at the chart, launched in 2011, about $25 a share. And today we're sitting at about $77 a share. Now, again, this is what you want to see with your long-term holdings, your ETFs. Just steady growth. Pullbacks, accumulation, growth. Pullbacks, and I know growth stocks like tech has been like crazy runners. Something like the dividends haven't been running as well. So I think 2024 could actually be a good year, but this is something I'm going to keep buying for 5, 10, 15, 20 plus years. So I really I just wanted to give you guys a little overview of the chart. Next, I will talk about, kind of go over it a little bit. This is Seeking Alpha. This is really good if you want to, if you're kind of lost on what should I buy long term, what's good long term. Seeking Alpha is a great website. I use it all the time. It just kind of gives you stats, summaries, the holdings. Now, the SCHD holdings changes every quarter or so, I believe. As you can see, some of these are above 4%. I read through their stuff. When they rebalance, nothing is above 4%. So if you see some above 4%, that just means since they put it at 4%, it's risen that much. So, as you can see now, this is as of a couple days ago. I don't think it's changed since then, but they got Coke, Chevron, Texas Instruments, Cisco, Verizon, Home Depot, Amgen, Merck, just really solid companies that have been around a long time and pay very solid dividends. So that's what you're going to get here. You're going to get very solid dividends from a bunch of really awesome companies. And that's why I really like investing in this one. And just kind of go over the dividend history of it, since its inception. Since it's a combination of companies and they're always reporting, different dividends and whatnot, your quarter to quarter could go up and go down. Like Q1, or the last 4, 60 cents, 66 cents, 65 cents, 74 cents. 74 cents was actually its highest one, so that's what you want to see, right? You don't want to see lower dividends. You want to see steady growth in your dividend because, inflation ain't going down, so your dividends got to keep up with inflation, right? So I really like SCHD as a core dividend play for myself. And the other one I really like, we'll get into a bit. We'll start off with the chart, actually. It's a REIT, a real estate investment trust. I wanted to have one of these in my portfolio for steadiness. Vici opened up in 2017 around under $20 a share. It now trades for $30. You're thinking, wow, that is not that great, right? 6 years and only went up $10. That's kind of what you're going to see. At its top, you're going to see 35. These are very steady companies that pay very big dividends. You're not going to get a ton of growth in the share price. It's very possible to over the long term, but what you're here for is to compound your dividends. But still going from under 20 to under 30, it's still positive growth. You're going to get share price appreciation here as long as it's a good REIT. And I think I have found one. So let's head over back to Seeking Alpha and kind of just go over it a little bit. I think the big thing with REITs that have hurt them recently and not really allowed them to keep increasing in price is the rates. You know, we've had higher rates than the past 5-10 years lately than we ever have. So that has, and you know, real estate directly deals with rates. Rates are higher. That isn't as good as lower rates for real estate. So I think, you know, the writing's on the wall. Rate increases are done. When are we going to get rate cuts? I'm not a betting man. I'm not going to tell you when that is, but I think it's going to come sometime in 2024 if I had to guess. And I think that will help real estate investment trusts like Vici. And I wanted to show one other thing. They do quant rankings. This is from Seeking Alpha again. Out of the industry, it's 2 out of 11. It gets a lot of good ratings. Like right now, it's a hold. And I think that's mostly around just the fact with all the rates and stuff. I think once you see rate cuts, you're going to see these change. But again, these are just ratings. These can change every other week. But the other thing I wanted to show was the dividend history since its inception. It's had a very solid dividend. We'll go to the max. Basically has just been steady. It'll increase it increases every year. And right now you're getting $42 a share. Or dollars. Wow, that'd be amazing. $42 per share. No, 42 cents per share. And I believe right now, if I have to look at my portfolio, my shares of Vici are at just under 34. So I mean, that's not bad. And I want to obviously keep increasing that. This is a long-term hold, which will increase my dividends, blah, blah, blah. So the other thing I wanted to show you, like, oh man, this is crazy. Like all your what are you doing with dividends? Why don't you just throw it in the S&P 500? And why don't you throw it in tech? Because, well, tech is just the flavor of what's been really hot lately. Don't get me wrong. A lot of these big tech companies kind of just rule the world. And it's not just like they're a tech. They're basically have 30 different streams of revenue. But I just wanted to show you, this is a great website if you want to look at dividends. It's dividendchannel.com. So I'm going to do SCHD. It says 1995, but it's just going to take it from when it started and compare it to the S&P 500. Boom, there we go. Okay, so 2011. This top one is with your dividends reinvested. That means every time you get a dividend, you just put it right back into the stock and you keep compounding. So if you would have done this, the S&P 500, you'd be at about 50 grand right now if you invested $10,000 starting in 2011. If you did it with SCHD, he'd be at just under 44,000. Now, you could say, oh, that's 6,000. That's almost a $6,000 difference. Like you're kind of losing out on some money. But you gotta keep in mind, if you look here, I mean, it was basically a tie. It's hard for me to tell here. That probably would have been 2022, 2021. As of 2 years ago, it was basically a tie. So S&P 500 tech, which is not in a SCHD dividend growth area, tech has really ran. But I mean, you can see SCHD isn't that far behind, and it was basically the same. I just feel more comfortable, more secure with a safe play like this. And this just shows you can still make the same amount of money, relatively speaking. But I feel more safe in a sense for the long term. Now, I like to do trades and stuff and whatnot, but those profits, I just pump them back into my long-term stocks like this. So I did want to do this for Vici as well. Vici hasn't been around as long as SCHD. Whoa, that typed it really weird. Okay, there's Vici. So we'll compare it to the S&P 500 again. So this is 2018. So if you did this with dividends reinvested, $10,000, you actually would be making more money in the last 6 years with Vici. And I just think that's incredible when you think about when you go back to the chart and look, you'd be like, how is this chart making me more money than the S&P 500? But that's the power of reinvesting your dividends in dividends. So I just think these are my top 2 dividend plays. There's plenty of other ones out there, but I specifically wanted an ETF and a REIT. Those are what I wanted for my dividends. The ETF means I don't have to go out and pick which dividend plays I like. I'm going to get about 10, 20, 30 plus companies that all really solid, good companies that all offer dividends. And I'll just get a collection of that. And that's what I wanted in my ETF SCHD. And then I wanted a REIT. Again, we talked about it. REITs give very high dividends. Not as much share price, but as you can see with this again, if you just keep reinvesting your dividends until, the time you actually want to take your money out and sell eventually when I'm older, the power is there for some very nice gains on your stocks. And again, I just feel like dividends are a little bit safer. So don't get me wrong, I still have growth plays. I'm invested in tech, I'm invested in whatnot, and I make risky trades sometimes, but this is where I like to funnel my money back to because I can still get long-term gains and I feel the dividends are safer. I don't want to use safer because, you can always cut a dividend if the company isn't looking good, but that's on me to find the right ones to invest in. So, those are my top 2 dividend plays. And I put my money where my mouth is with these. I invest in these. So these are my top 2 dividend plays. So if you liked this video, please give me a like and subscribe to the channel. I would really, really appreciate it. That helps me a lot. Also, follow me on Twitter/X at Tyro_investing. Have a good time on there. It's always fun to interact with everybody, so I appreciate that too. With that all being said, appreciate y'all. See you at the next video.